Hello friends, this is Dr. OG Crypto here, your mentor and tutor for your trading journey. I'll be introducing you to the best forex and crypto trading course for a total newbie or an amateur or a professional trader. My goal for creating this course is to make it for free and make it even more better, relatable and understandable than any trading course that you can get for $1,000. So we've really gone far with our videos and with our lectures, and I'm so glad and happy that you got it up to this stage. So now we've left the beginner stage, we've left the amateur stage. Now we are finally in the advanced class. We are now finally in the advanced class. So now I'll be introducing you into a concept called smart money concept, that is ICT strategy. This is actually a very, very good strategy, a very, very interesting strategy, a very powerful strategy that works like magic. You understand? For me to gather all my knowledge about this particular concept, I think I spent around $1,250 or so before I can, like, I paid I paid $300, $200. When I calculated it, then it's around like $1,250 that I used before I was able to actually get what this concept is all about. But don't worry and don't panic. You don't need to pay the amount of money that I've paid. The course is here for you for free. And what I did is that I was able to join each and every knowledge that I gained from each of the courses that I've paid for in the past in order for you to create, in order to create a particular good and well understandable and well structured video for you concerning this particular concept. I want you to pay a rapt attention to this particular concept, because once you master it, there's nobody that can tackle you in the market. You will be invisible in the market, and you will see that your profitability is going to increase. Now, this smart money concept is that, okay, you don't want to be like just an ordinary trader that you just trade with impulse or trade when you feel like, or no, you want to have a particular system, a trading system that works. You understand? So this is what you need, is what a smart money concept. Now, this is a bonus and a life-changing opportunity that I'm giving to you. What I paid $1,250 for, I want to give it for free. So I'm begging you, please and please pay rapt attention. I don't want you to get bored. I want you to even carry your pen and paper so that you can jot things down, because if you have the intention that you want to jot things down, it will make you to actually pay rapt attention and also to get everything that I want to teach you in this class. So without wasting much of our time, let's get straight into it. Let's get straight into the course that I have for you today. So we're talking about, this is an introductory class to smart money concepts, or also called SMC strategy. Some people call it ICT, and so on and so forth, like that. So I've created some write-ups so that it will, if in case you want to pause the video and play, so that you can jot some things down. So I've done that for you. And if you want to send me a DM, this is my WhatsApp. And if you want to message me on Twitter too, you can see my Twitter handle here at CryptoFXOG, at CryptoFXOG. So let's dive into it. So now, when we say smart money concepts, so what are smart money concepts? First of all, I want you to understand that you, me, and everybody, that's like you, maybe your friend, and everybody out there, we are all retail traders, in the sense that we don't have big capital for us to move markets. You understand? We are using small capital to move markets. We don't have the tools. We don't have the tools that the smart money concept people, or the big market players, the big market movers are using. You understand? So we are, and our capital too is small. Therefore, we are referred to as what? As a retail trader. But as a retail trader, you want to actually change the way you see the markets. You don't just want to be trading with emotions, with impulses, or just gambling here and there. You want to actually have a proper trading system. So this smart money concept is for you. Now, if you've been trading for a while, or maybe you've watched any trading related videos, or maybe even if at all you've watched any finance videos, you probably have heard the term smart money. when we say smart money, you can search for it on ChatGPT or search for it on Google, that what are smart money. I'm sure you know, you will be like, okay, what does smart money really means? So now when we say smart money, it refers to a large institutional traders such as banks, such as hedge funds, such as prop firms, you understand, that have the capital, they have the capital, they have the technology, and they have the knowledge to move the markets in their favor. They have all what it takes to move the market in their favor. Those are the people we call smart money. People that money is not an issue for them. They have this huge capital that they can use to do as they like in the market. The market players, the market movers, the big boys in the market. Those are what we refer to as what? Smart money. So these institutions don't rely on retail indicators. You know, I've taught you how to use indicator, how to use chart patterns, how to use candlestick pattern, and so on and so forth like that. These smart money people, they don't use indicator or chart patterns for them before they can say, okay, they want to long or they want to short. Instead, they base their trades on liquidity, market structure, and order flow. I'm going to be explaining each and everything of what this thing means for you. So that's how they trade. They don't analyze, like they just look at it. Okay, the order flow is uptrend, we are going up. So they'll just look at, okay, how can we do 1 and 2 to actually stop retail traders so that we can what? We can make profit. Unlike retail traders, which is you and me, who often react emotionally to price movement. Once you see markets going up like this, you quickly want to buy. Once you see it's going down, you quickly want to sell. You are on a buy trade, or you are longing a market, then you see that the market is retracing a little bit, you are panicking, you quickly close it. They don't do like that. So unlike we retail traders who often react emotionally to price movement, smart money executes well-planned strategies that involves creating liquidity traps. They will do as if they want to buy, but in actual sense, what they want to do is to sell. You understand? Manipulating price action. You see, they do manipulation. Why? Because they have the money. They are the big boys in the market. So now them get the market, so they can do and undo. You understand? And ensuring their orders are filled at optimal levels is where they want to fill their orders to fill. That's where they are going to fill their orders. You understand? So those are smart money for you. So how can retail traders compete with these market giants? Imagine someone that can decide and wake up today that I want the market to buy, I want the market to sell. How you that you are using $50, you that you are using $100, how can you compete with these market giants that are using $1 million to open position, using $10 million to open positions? So this is where the smart money concept now comes in. So you need to apply a strategy. You need to apply a concept. So we now term that concept what? Smart money concept. So that is what smart money concept entails. You understand? I'm sure you're already getting used to what this thing means now. So now, what is this smart money concept we are talking about? What is this smart money strategy that we are now talking about? So it is a trading framework. It is a trading framework or a trading system that is designed for we retail traders to analyze and follow the actions of these big market players that I tell you about, of this market giant that I tell you about. You understand? Why smart money doesn't follow SMC as a strategy themselves? Because since they are the one that create the market, they are the one saying, okay, market should buy. They are the one saying market should sell. So they don't use SMC concept. So don't think banks, don't think financial institutions, don't think government, don't think they are using SMC strategy to trade. No, they don't use it. But it is we retail traders that are using this smart money concept to actually trade the way the banks trade the way whales in the market trade the way government trades, the commercial banks trades. You understand? So this approach allows we, the retail traders, to track the footprints of this market giant on the chart and also to make an informed trading decision. You understand? So rather than relying on traditional indicators or retail trading patterns or chart pattern or anything, so smart money concept, we focus more on what? On liquidity zone. We will focus more on market structure, we focus more on order flow. You understand? So those are the main three things that we focus more on. So inside all these things, there are still some other tools that are embedded in these three key things. You understand? Which I will be opening our eyes to as the video progresses. So if you understand SMC very well now, you will no longer be manipulated by the market, and you start trading in alignment with institutional movement. You know, if you can't beat them, you join them. It is a tug of war. Market is a tug of war. Is where the liquidity is plenty that the market will shift to. Someone is longing Bitcoin with $1 million, and you want to use your strong head to short Bitcoin with $50. Where do you think the market will move to? With tug of war, of course, it's going to go to the what? $1 million. So you as a retail trader, how can you be smart enough to make sure that you are always eating, you are always printing with the smart traders? You what? You look at it, okay, since these smart money people, that is people that make the market themselves, since they want to go up, why don't I develop a strategy so that I will see that footprint and I will see that hint that, hey, they are about to go up, then I will go and long. You understand? You see that I'm going to make more profit than someone that is just another retail trader of mine that is just using any strategy that he likes, maybe indicator and so on and so forth like that. So that is that about smart money concept. Let's still check more about this smart money concept. So we can also say smart money concepts are tricks that are used by big experienced traders and institutions in the forex or crypto market. So think of them as the special moves. You know, it's giant that does special moves now, that is used by these market big players to make profit. So knowing this can help you to understand the market better and also to improve your own trading. When you know, okay, this is where they move, this is where they stop, this is where they sleep, this is where they jump, and so on and so forth, you understand, you'll be able to know that, okay, let me enter from here, so it will help you to make better trading decisions. So these concepts are important because they can show you how the market really works. So instead of relying on indicator, instead of relying on chart patterns, this smart money concept will show you the big picture of how market really works, how the market is really moving. You understand? So just think of it like they are like a behind the scenes look at what drives markets either up or down. So by using this concept, you can make smarter trades, just like the professionals in the game. Just like the professionals in the game. So that is that about smart money concepts. So now, why should you learn smart money concepts? I'm sure by now you already know the answer. I'm sure by now you can give one or two answers of why you as a retail trader should learn smart money concepts. So if you are serious about trading crypto or serious about trading forex, learning smart money concepts can drastically improve your decision making and have several key advantages over just using your normal retail trading strategy, that is your normal indicator, your normal candlestick pattern, your normal chart patterns, and so on and so forth like that. So why? Number one is that it will help you to avoid getting trapped. Number two is that it will help you to trade with more confidence. You understand? Number three is that it will increase your profitability drastically. Number four is that it's going to improve your risk management. It's going to improve your risk management. Because another thing about smart money concept is that your stop loss will be minimal, while you'll be able to catch bigger moves. You understand? So it's going to increase your risk management. Then it will also help you to think like big players. So you will not just be trading a pattern alone. You'll be trading story. You'll be trading concept. You'll be trading logic. You'll be trading with understanding. So that is, you'll be able to think like the big players. So trading with a smart money mindset puts you on the same playing field as institutional investors. Meaning that if you know this smart money concept, your $50 you'll be able to make decision just like people that are putting $1 million makes their own decision. Do you understand? So which means that you no longer react based off emotions. So that is that about why you should learn smart money concept. So now let's compare a smart money and a retail trader. Let's compare a smart money and a retail trader. Now, smart money and a retail trader, let's compare them. So in terms of market influence, the smart money are large and they move the market. They enter the market with what? Large capital, and they move with what? They move the market. But retail traders, they move with small capital and negligible impact. In fact, even if you are using $100,000, it cannot really move a Bitcoin chart, for instance, because one Bitcoin is $81,000 currently. So one Bitcoin that is $81,000 currently, and you are using $100,000 to trade. It's just like you are buying one or you are selling one BTC, 1 point something BTC. So you cannot really move the market when we have like about 6,000 or 3,000 BTC. You understand? So number two is that what difference between a smart money and retail traders is in terms of decision making. When smart money want to make decision, it is strategic and it is based on liquidity and order flow. But retail trader, you just you make your decision based on your emotion. I feel this market will go up. I feel this market will come down. Indicator is telling me that it will go up. Chart pattern is telling me it will come down. Like you are just trading based off what a particular software that was designed is telling you. You get. So, and compared to someone that knows how to move it, that okay, hello, let's click on buy, then the market will start buying because they have the large capital. In terms of strategy, smart money, they are the one that create the trends. Whether they want them to move the market up, to move the market down, they are the one creating the trends in the market. So therefore, they can also manipulate the price of any coin or any currency pair. You understand? So, but in terms of strategy for retail trader, they are the one chasing the trend. Imagine someone that is creating trend, while this one is the one that they are just chasing the trends. So they are placing stop losses in predictable zones. And what one thing that you must know is that this smart money, they will come and eat where their stop losses are. You understand? So what is the goal? What is the goal of a smart money? Their goal is to accumulate and distribute positions at optimal prices. That is where they want. But the goal of retail trader is that they just want to make quick profit, and often without what? Deep analysis. So that one is telling you that what? For smart money, before they even do any decision, they make sure that everything aligns. Their market information strong. They have strong information before they can move. So that's why they are strategic, and they buy at what? At the price that they want at specific zones. So those are the two small comparison about what? Smart money and a retail. Now, based on these two comparison, now which kind of trader do you think you want to become? Which kind of trader do you think you want to become? So example of retail traders are all these: me, you understand, and so on and so forth, like that doesn't use small big capital in the market. Now, example of smart money, whether in forex or crypto trading industry. Example are the financial institutions, we have the investment firms, we have the market makers, government, commercial banks, central banks, and so on and so forth, like that. So those ones are the what? Smart money. You understand? So those are the smart money. So that's example of smart money. Now, what are the key tools that you use in smart money now? What are the key tools that you must use in smart money? You know, when I tell you about indicators, I say you can use Bollinger Bands, you can use Bollinger Bands, you can use simple moving average, and so on and so forth, like that. So this SMC strategy, this SMC concept, what are the components of this SMC? The components, should I say components or tools or keys that make up this, or pillars that makes up this SMC concept, that makes up this smart money concept. So we have like about 6 number of them. though some people can elaborate it more, you understand. But my own strategy of this SMC is always KISS, key strategy, that is keeping it short and simple, you understand. So number one on the list of the components of SMC is market structure, market structure, market structure. Number two, order flow, order flow, order flow. Number three, order blocks, order blocks. Number four, break of structure, break of structure. Number five, change of character, change of character. Number six, fair value gap, fair value gap. Number seven, liquidity, liquidity pools. You understand? Liquidity pools. So liquidity pools. So we will now be mentioning it one after the other. We'll just be taking it one after the other in our in our next video, and we'll be looking at it one after the other. So the concept, the components of the concept, order blocks. When we say order blocks, so they are like a specific point where there are a large or a huge chunk of smart money trades are. So that's where they place their trades. So at order blocks. So finding where big traders are likely to buy or sell a lot. That is where they want to sell big amount of their orders. That's where we refer to as order blocks. So fair value gap is also part of it. So when we say fair value gap, so they act as price magnets and are typically filled. So by the time you see, don't worry, when I get to fair value gap, I will explain it more. But the way fair value gap is that when market is moving impulsively, imagine someone just enter immediately with $1 million. What happened? The market, he bought, let's say he bought gold with $1 million now. What will happen to the price of gold? Of course, it will go up. So by going up impulsively, it's not going to allow sellers opportunity to fill their own orders. So therefore, large buy orders are going to be printed. So because of that, they will be leaving gaps in between, and the market is not balanced in that way. The market needs to come back to that place to come and fill that place. So it's forming gaps. So we call it what? Fair value gaps. So we'll still talk about supply and demand zone. This supply and demand zone just still say, okay, it's still order blocks. You understand? It's still order blocks. Though we have different types of supply and demand zones, but the one that we use for SMC is still what? Order blocks. So zones where price fill depending orders of market makers. So we have change of character. So this change of character and break of structure, they are almost like the same thing. So it signals a possible trend change. That's change of character. When the market starts acting differently, points where the normal pattern of the market changes. So that is break of structure. In fact, this break of structure means break of market structure. So that one now brings us to one of the components of SMC, which is what? Market structure. So the market structure is just like a foundation where we build all these other blocks, fair value gaps and everything on. You understand? So it tells us the trend of the market, whether we are in uptrend, whether we are in downtrend. So now, let's say the structure that is now being formed is now uptrend. So it's break of structure that will tell us that we are not in the normal uptrend that we know before. We are now higher. Don't worry, we are going to be doing a lot of practicals, so you are going to understand it. So change of character is when, okay, the market structure is still showing us that, okay, we are higher. It will now get to a point that the market will now reverse. So you see trend change. So when markets reverse and we are now forming lower, so that place where it changes or switches from that upper to lower is referred to as what? Change of character. Then we'll also be talking about what? Liquidity. So in our next class, we are going to be discussing and be taking each and every one of them, starting from what? Starting from market structure. So please stay tuned. This point that we have, which is professional level, I want you to be very, very serious about it. Once you are serious about it and you are jotting things down and you are practicing, immediately you finish watching the video, you practice, you are going to understand it very well. You understand? So next class, we are going to talk about basic market structure. So see you in the next class. Bye, everybody.